You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of volatility? Well, let's find out together, shall we? Because it is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the optionsinsider.com, as well as from the network upon which so many of you are binging, back in the Chi-Town studio again. Good to be back behind the old studio microphone again, all the bells and whistles. It's just fun. So if I sound like I'm back to normal, that is why, listeners. Of course, if you like what you hear on the VolView side, on the rest of the network, whatever we have cooking out there, make sure you leave a rating, a star, a comment, a like, a review, whatever your platform lets you do. All of that stuff in aggregate all helps new people discover the content, coming off the heels of yet again the hottest year in the history of the network. This January marks 17 years, hard to say out loud, but we've been doing this podcast thing for quite some time, so we got a little bit of skin in the old podcast game. So that said, new stuff does tend to be favored by the algorithm. So recent reviews, comments, if you've been listening for a while, never left a review, throw one our way. It doesn't hurt. And it all goes into that heady mix to have new people continue to discover the show. And of course, if you want to discover more great content, let's say, for example, you're really into listening to some shows and you don't want your broadcast week to end with Volatility Views. No, you want to keep going. Well, then head on over to theoptionsinsider.com/pro. If you do that, you'll get access to Options Oddities coming up after this show and pretty much every VolViews out there every week. Also, great pro Q&As. I looked the other day. We're closing in on 400 episodes now on that feed, that exclusive pro podcast feed that we give you folks access to when you sign up for the pro. So there's a lot of great stuff on there, including no promises, but including I'm going to try to get that panel I'm doing next week with the Flow Master and JJ from IG Group and Tasty Trade and some other great folks. Going to be breaking down all the world of options over there. Going to make that a nice little fun pro exclusive as well. So if you like to have all that cool stuff, plus great exclusives like that panel, plus pro Q&As, plus live access to this, everything else we do, plus awesome giveaways, man, we throw a whole bunch of stuff in there. Theoptionsinsider.com/pro is the place to go. Everybody loves it except for this guy, because he's a grumpy Gus. He is the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Whenever our listeners tweet about getting one of their pro crates or they mention it or we talk about the winners, he always takes umbrage because he does not get a pro trading crate. He is the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. How goes your umbrage level today, sir?
Besides missing a couple of easy closes this morning and some SPY and IWM calls, I'm fine. I was a little bit of a greedy Marvin this morning.
A greedy Marvin. Oh, well, there we go. A new thing. Yep. a new characterization of the Rock Lobster. Not just a grumpy Gus, listeners, but a greedy Marvin, as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We review the week that was and indeed still is from a vol trading and analysis and unusual activity, all sorts of fun perspectives. And coming into the start of the show here, we had the markets mostly flirting with the green, or excuse me, mostly flirting with the red throughout most of the early session. And now the S&P is kind of hanging unched to flirting with green, kissing the green. NASDAQ, same deal. So S&P and NASDAQ both hanging out close to unched right now. And the Dow still looking the laggard, off about 0.4%. We'll see how that goes as the day progresses. And when we saw it yesterday, kind of the mother of all recent whipsaws, man, they were coming for it. And then they just turned it on a dime. So a lot of madness unfolding out there in the markets. A lot of things driving the markets right now. Of course, we had the earth-shaking news that everybody was all fired up about this week and have been waiting for months. Of course, the approval of the ETF out there for Bitcoin. New earnings season kicking off in earnest this morning. Citi, not exactly lighting the world on fire, calling it a very disappointing quarter, announcing a ton of layoffs. So everyone loving the financials post-Fed decision, maybe not so much now after some of these numbers are coming out. Of course, all the unfolding madness over there in the Middle East. Just a lot of things being weighed by the market out there right now. And all of that reflected in a VIX, which is continuing to come in right now. VIX at a 1270 right now, down about 0.8 of a point. So nearly a full point from where it was this time a week ago. And VVIX, the vol of vol, also continuing to give up the ghost, down to about an 82, down 8 points from where it was this time last show. So VIX and the vol of vol itself both continuing to erode here into the start of the new year. Mr. Rock Lobster, we'll start with you. You know, this I hate to say it, but it feels appropriate, kicking off the new year in January with missiles being fired off in the Middle East. January, I've said it many times, January comes in like a lion, it seems like, every year post-pandemic. In fact, people always forget. Everyone starts thinking about 2020 around the February, March timeframe and all the pandemic stuff kicked in. But of course, we kicked off 2020 in January, firing missiles in the Middle East again and assassinating that Iranian general on the runway there. So vol spiked then as well. So January for the last few years has kind of had all sorts of surprises up its sleeve. And that continues to be the case this year. So a lot to unpack. Mr. Rock Lobster, it is appropriate then that we are kicking off January, the way we've expected for a while now. At least I have. Some sort of unknown unknowns dropping for us out there. What is catching your eye out there in yet another crazy start to the trading year for Volster?
Well, I guess the simplest thing is, I guess we're going to do that. We're going to do the VIX volume and the volume part. But we're starting the year off kind of the opposite of how we started last year off. As I recall, last year at this time, VIX was not 1260.
No, it was over 10 points. Yeah, it was about 10 points higher.
2174.
Yeah, it was about 10 points higher. Yeah, it was a very different regime.
And SPX was 3977. So if you just bought the SPX at the beginning of the year and you held it, you did pretty good. So, and again, a lot of times market goes up, and this was in the face of interest rate hikes the entire time. So what I would say is, from a vol point of view, like VIX at this point is like, I would say kind of fairly priced. I think in this, I guess because we have the holiday to come out, and then the VIX futures probably will normalize, and then we'll see where VIX ends up on Tuesday, right? Because we only have Tuesday and then the Wednesday settlement, so this is a tighter month. So I would be surprised. I have very little January left, almost nothing. I got a couple 13 strike lottos, but for the most part, I think we have kind of a sort of a normal looking VIX, I guess is the easiest way to say it. At least for right now. Now, yesterday's action, we had a CPI number that came in a little hot, and then we had a PPI number that came in not, right? So there's actually they're showing a decline in some producer prices. And I'm not sure that how the market took that. Like, is it a recession, inflate? Like, so a little bit of mixed signals. I don't see how the Fed does any rate cutting at all. And I think we're still in the throes of all of this. Are they going to cut? Are they not going to cut? And I think we've been doing this show, well, for a long time, but this whole entire the last year or so, we've listened to this, everybody opine that the Fed was going to cut, and how that might affect volatility. And every single time, I think you, Tucson, I don't know when even Mark was on there, the Fed has not deviated. The Fed, if they say they're not cutting, they haven't cut. If they said they're going to raise, they're going to raise. And they haven't said anything about cutting rates. So now that takes place on January 31st, which would naturally generate some interest in the Feb VIX options, right? Because all the Jan 19s will be gone by then, will be expired. So I see that all as again, interesting confluence, but without any more news, any more indicators, any more anything, where do things go? And I think it feels like a little bit of a meander. We had some bank earnings come out today, and I think overall they were just kind of meh. JPM was up $3 at one point on the open. It's like down over $6 from the open. Bank America down 35 cents. Citi up 75. So banks' earnings are kind of, I would say, in line. So all of those things, if we're, from a VIX point of view, are kind of vol killers. Things coming in line, the market sees more certainty, volatility comes in somewhat. So, however, VIX cash has been up all day today. Now, part of this could be this Houthi strike, and I, as I recall, what was that, 2019 when they took out the Iranian guy?
2020, like I just said, beginning of 2020. Everyone forgets, right before COVID, we were
it was right before
launching more missiles in the Middle East.
That's right, because weren't we going through the Ukrainian impeachment? That's right. It's hard to keep track back then, pre-COVID, with all that.
It does seem like the before times. Yes. Lost in the ooze.
And then I believe, let's see, that was in retaliation for some sort of, like they bombed some U.S. soldiers, or somebody did. And now I think this is, I believe, in retaliation for messing up shipping in the Red Sea. And as I recall, volatility went down right after that. And then, of course, COVID came and messed everything up again. But I would guess, who knows what's going to happen, but it's not, it doesn't feel like it's lingering as a volatility event right now. So from, again, beginning of the year, we're coming into, 12 is the top of zone 1, the bottom quartile for vol, or pretty close. I do 13 to 9, basically. And then I think VIX spends 50% of its time below 18, according to the Russell data, but that was also stuff that I looked at as well a long time ago. So it spends half its time down here. It just, in the last 4 years, it's been kind of an outlier for activity. So I would just say right now we have, the market is close to highs. VIX is 12, about where it should be. The last thing I would say about volatility is guess the SPX realized vol in the last month. 30-day realized vol is 9.6%.
I was just going to say probably about, I'm going to guess 11. So 9.
Yeah.
Oh, okay.
Yeah. It's in single digits. So that February future, the real vol, the forward, like if you're looking at real vol premiums, you know, if you're buying options, you're kind of sucking on it right now in those cycles. You're paying real money over what SPX is doing. However, yesterday, that intraday move in CPI. So I looked. I think that was the last 8 or 9 CPIs. Within 3 days, we had a 10-point move in SPY or a 100-point move in SPX. Yesterday, even though we finished the day unched, we had a 7-point. What were we from the top? I think from top to bottom, we were down 6 or 7 points, and then we moved back up 6 points. So I think we had 12 points maybe yesterday in one day. So the CPI numbers are still delivering what I would call some sneaky volatile moves in SPX. So, I mean, I see that basically as, kind of what the vol roundup, what's going on. We got lower realized vol, the Magnificent 7 stocks. I don't know how much more expensive they can get. They could go higher, I'm sure. And even this rocket thing couldn't get the oil stocks. They all opened up today, but they've all pulled back from those highs. So it's hard to kind of get any jazz. I thought we'd make an easy run at 4,800, and I think we were above that this morning at some point. Did we hit that number? Yes, we were 4802.40 for the high in SPX. So we did hit 4,800. Everybody looked over. It's kind of like going over the wall in World War I. They looked over. They said, "I don't like what I see," over 4,800, and came right back down again. So until we see some corporate earnings, maybe where we don't have, I don't think there's a lot of catalysts out there. But at least the momentum is still positive SPX. Not a lot. It's a low vol positive momentum. And VIX being at 12, I mean, that's generally stocks go up when you see vol that low. And I think that's kind of just where we sit right now.
That is where we sit indeed. I was just checking out our chat while you were talking. Some folks have snow days. Yeah, I forgot there's a lot of weather impacting people. So hopefully you're staying safe out there in the Midwest and East Coast, everyone affected by this weather. But hey, makes it a good day to join us in the chat. Nothing better than a little vol snow day to end the week out there. And then, of course, people pointing out, yeah, it does seem like pre-COVID is another lifetime ago. And they are correct. In fact, I was just looking at the numbers while the Rock Lobster was talking. In January 2020, a pretty rocking month. We came into the start of that year at about a 14 in VIX. And then it shot up by the end of January to almost a 20, about 19 and change, based off primarily that rocket attack. I think there were some early stories, obviously, of COVID as well. And then it kind of settled down until second week of February or so. That's when I was down at the risk management conference in Florida, and all that news broke that FIA Boca the week later was already canceled, and that's when everything was starting to break, the news of Italy and everything. And then, of course, we all know what happened after that, VIX skyrocketing in March up to 60 and beyond. So crazy cakes times, but people always look past for understandable reasons. But January in and of itself has not been the sleepy month some people associate it with for a while now. Let's go out and see what the futures are telling us right now. What's lurking out there in the volatility surface this week? Coming into the start of the show, spoiler alert, the vol surface is lower. We've got that front future down about 1.25 points, a little bit more than that right now in that Jan future. And the Feb future down almost a point, about 0.92 when we kicked off the show. And again, if you go all the way out to, let's say, September of next year, that's the highest spot we're seeing on the board right now. That's about a 17.5. So again, the 20 handle, a distant memory on the vol surface right now. Now, again, we are pricing in obviously more juice going into that election period, which if past is prologue, that will be delivered upon But intriguing stuff afoot out there. Mr. Rock Lobster, sir, what's catching your eye in the volatility surface this week?
The volatility surface. Well, like I said, we have a pretty normal contango. I think VIX is a little expensive, or the futures are a little cheap because of the holiday, the one holiday day. It's been kind of sitting in there. They are now back to what I would call, or very close to what very normal levels. So I have this little graphic I'm going to post here. I'm going to put it in the Skype for you so you can check it out. But these are like, we're literally within 19 to between 5 and 20 cents of just being in a normal area relative to where VIX cash is for this time in the cycle. So what I try to do, or what we did, was we did a study and did a regression analysis and just like where VIX is in a 30-day cycle. So what I figured out or learned to trade VIX is just in the 30-day increment. Like basically the clock starts on expiration, and then how do the forward vols and the futures react versus where the cash VIX is, and how those things kind of react around the VIX cash. And then you have the 30-day countdown, and then your 30-day countdown is over. You get a new 30 days at the next. So I have found, for at least for me, that's the easiest way I have found to trade VIX. So 30 days gives you a lot of action. 60 days gives you some. 90 days is kind of like watching paint dry. So you're basically doing the Matt Amberson. You're buying the high Vega, high expansive volatility options. When you go 30, you go like 90, 120 out like that. So what you have now is you have, again, they've taken the 3-day holiday out. So 10-day vol is now down to 1081. So that has been decayed. So basically the 3-day holiday is about out of the options at this point. VIX is 1260. The Jan future is now 1316. Feb is 1440. So you have what I would say a relatively normal values for where we are in the cycle. So it's kind of boring and humdrummy. I will say though, today, the thing that I've noticed, the outlier, and we'll talk about a little bit, is VVIX, after trading in the 70s for a couple days, and myself and a bunch of my students in the pro chat room were just buying VIX strangles like crazy in February and March. Once the strangles get down below around the 80 handle, they don't have a whole lot. I mean, it has gone to what? VVIX, I think like the low 70s or maybe high 60s. So start accumulating a pretty good chunk there. And today, actually, those strangles are just slightly green after being down after we started buying them. So they're pretty much back to even. Nothing to write home about yet. But there is, I would say, not really a vol surface thing, but VVIX found a floor and has started going back up again. What that means, I don't know. But it's good for my strangles at least, so I don't have to cry and watch them just evaporate. But at this point, I think that's kind of where we are. So, if vol blows up, I'm not going to complain. But at this point, the way like the term structure is looking and everything, it's not like the market is not signaling really a whole lot of action next week. Anything could change over the weekend, but pricing wise, from the vol surface does not signal any action. The only change really has been just massive buyers of options, and that has pulled VVIX back up again. But we'll hit that when we look at the volume today.
You forgot today is a volatility snow day. So today also a holiday. So actually it's a 4-day weekend now, Mr. Rock Lobster. So they're taking that juice out willy-nilly out there, left and right. No juice left to be wrung.
Yes, it has been. I could, because I've got a cup. That's why I was grumpy this morning, because I knew this morning when everything was bid, it's like, from here on in, everything is going to evaporate. But I thought we would rally some more, so I held some calls a little longer. And yes, I am a slight bit of a Grumpelstiltskin.
How many times did you come on this show grumpy about holding your VIX calls too long? I've lost count of how many times. We always say you got like 2 seconds.
Just like stupid SPY and IWM calls. It's like, anyway.
You've never seen
that's what I sold some. But what happens when I don't stop the rest? When I'm thinking, I start getting those, Elysian field looks. Oh yeah, we're gonna bust through 480 SPY and everything is gonna be beautiful. I'm gonna make thousands of dollars no.
Here it comes.
The only thing I'm happy I did is sold what I did on 30 minutes after the open.
These days, you've never met a VIX strangle you don't love. I can see the logic. I also have a hard time buying them because we talked about before, the calls are a road to nowhere unless you get that magic 2 minutes where they make some money for you. And the puts are just kind of sitting there and dying on the vine right now, too. So I see the logic behind it, but also I can't get excited because look what we're seeing out there right now. But that said, speaking of what we're seeing on the futures front, a couple of the things. First off, you were mentioning earlier you don't think Fed can cut in this market environment. Looking at the Fed watch right now, which is, of course, keyed off of the Fed funds futures, we have right now only about less than a 7% chance of a cut going up for the January meeting. If you go out a little bit farther to March, though, listeners, you're almost at a 75% probability of a cut. So that has swung back up recently. So interesting. They are pricing in a fair probability of a rate cut by the March meeting. Speaking of futures, though, Mr. Rock Lobster, kind of the big announcement, the big elephant in the room this week was, of course, the final approval of the hotly anticipated Bitcoin, the spot Bitcoin ETF. Man, has there been a better buy the rumor and sell the fact trade in recent memory than this one? Man, they're coming for Bitcoin today. 43,500 right now, down nearly 3,000 handles or 6% right now. They ran this thing up for the better part of the last couple of months, all in anticipation of this approval. Now that it's out, they are coming for it the other side. Not going to have a crypto rundown on Monday, listeners, because of the MLK holiday. So maybe we'll do a little bit of crypto talk here right now. In particular, Mr. Rock Lobster, today also an auspicious day on both the crypto and the futures front, because our friends over there at CBOE, after infamously getting out of the Bitcoin futures game years ago, getting back in it today. Launched today. I thought it was supposed to come later. It was supposed to come the 23rd, but they launched them today. The digital margined Bitcoin and Ether futures. They completed their first trade as well on the Bitcoin futures this morning. So they are all excited about that, putting out press releases. So CBOE back in the game. It's not just CME talking about the listed futures, and hopefully someday for CBOE, the options as well. So there we go, Mr. Rock Lobster. A lot going on the Bitcoin and crypto front this week. Any thoughts on the amazing buy the rumor, sell the fact trade that has been the approval of the ETF, and also your thoughts about CBOE getting back in those waters, sir, with another future?
Well, the CBOE likes to be where it is, like where the action is. So I don't blame them for trying to rechum the waters there with Bitcoin. I found it a curiosity. It's kind of like this, it is what it. I don't get it, but it is. It also goes. It also. I feel like, there's certainly an investor class that is looking at it, and they're not liking the dollar. They're not liking what they see with the G7 currencies and all this. So they're looking for an alternative now. But it's also, you need willing buyers to make it go up. So also this week, didn't you find it odd that somehow the SEC, somebody hacked the SEC's Twitter account and said they had approved the coin? And then the action on it, it was like coin or Bitcoin, I don't remember which one. It got pumped up after that news after hours. It was like somebody ran a pump and dump scheme using the SEC Twitter account, which I thought was
that would not
bold.
surprise me at all. Very bold. You're hacking the SEC. You're hacking the big dog on that one.
Yes. It was very bold, I thought. And also the SEC had unsecured phone numbers and stuff in their Twitter account. Like, who's running that place? Anyway, does not surprise me too much. So yeah, I think I'm not surprised the CBOE's back in. I have looked at the BIDO because it has been paying that dividend, that 5% a year dividend to hold the ETF. So you can't make fun of anybody. Let's see here. So for the last year, you did about 100% return on the ETF on BITO, plus you got paid. Well, if you bought it at the beginning of the year, you got paid a 10% dividend to boot. That's not too bad.
That dividend is pretty bonkers out there. It's also a huge component of the returns. If you're not collecting the dividend, you're missing out. That's why I say people who are just buying the calls, they're missing on a good chunk of the juice out there. But still, yeah, BITO has been an impressive trade, certainly for the last quarter out there. Speaking of impressive, Mr. Rock Lobster, we got to get into some of this VIX action. This is crazy town. What's going on out here in VIX this week? Again, just everyone thinks January, the sleepy time of year. And of course, today is a volatility snow day, so nothing really much going on. I say nay. VIX is coming out hot going into a long holiday. It's a sleepy holiday weekend, too. Who's slinging vol? Well, apparently everybody. Right now, listeners, almost 1 million contracts on the tape in VIX right now. 991,000. Including one big bonkers trade. We'll get to that in a minute. I think we have a flash poll going out for our audience, whether you like this one or not. The ADV, no surprise, surging back to life. It was right around 600K this time last week. Today, 673, and probably going to continue going up after today's paper. Let's do a quick top 10 out there right now. Then we'll get into some of the stuff lighting it up this week, because there is a freaking tsunami of paper this week. Number 10, again, by the way, still 10-0 calls over puts. So if you're like the Rock Lobster, you're out there buying some puts in your VIX strangles, you're thinking this is the week VIX puts going to make it on the top 10. Sorry to disappoint you. Number 10, 205,000 of the Jan 47 halves. Number 9, 209,000 of the Jan 28s. Going to kind of roll through these kind of quickly, listeners. We got a lot to get to here in VIX land. Number 8, 213,000 of the May 47 halves. These were the ones we were speculating about on the Monday show, and that explosion of paper we talked about on the option block. Right around noon, already 700,000 contracts had traded in VIX, including massive prints of about 400,000 contracts right around 12:36, including a whole bunch of these, 200,000+ of the May 47 halves. We were speculating if it was a 1x5 or not. I think it was the May 22 47 half, 1x5, 30,000 by 150,000. Either way, boatload of the 47 halves going up this week. Number 7, 225,000 of the Jan 16s. The comparatively normal Jan 16s, followed by 226,000 of the Jan 18s. Again, normal. Number 5, 264,000 of the Jan 20s. Getting up there, but still qualifies as normal. Number 4, 265,000 of the Jan 25s. Now we're getting a little bit more outlandish. Number 3, 268,000 of the Jan 17s, right back to the normal range. Number 2, 334,000 of the Feb 20s. Juicy, but not outside the realm of normalcy. And the number 1 size position still in VIX options right now, 367,000 of the Jan 26s. That's getting up there a bit, listeners. Speaking of getting up there, let's get to some of the prints today. My goodness, what an explosion it is. Almost 1 million contracts, including right now, listeners. Somebody put up a print just a little while ago, 250,000 of the Feb 17s expiring on Valentine's Day. Paper gobbling up these bad boys, 4 cents through the offer for 67 cents roughly. Again, 250,000 times. So you like those Feb 17s, 67 cents, 250,000 times expiring on Valentine's Day. I do believe we're going to put out a flash poll. We already did. Our producer's hot on the take there. It's already 50-50 between buy them and sold to you. So get over there, add options on Twitter. This is going to be a short-term one, and see if you like those or not. I know we did those Jan 17s in the past, and you folks wanted to buy them. So I'm guessing if past is prologue, you'll want to buy these again. But yes, a tsunami of these. There's already 271,000 total of these Feb 17s have traded today. So clearly that is the big dog. That would be the big dog on any day. That would almost be the entirety of the action on some days on a quiet day. So 250,000 contracts. Nothing to sneeze at there. Number 2, 77,000 of the Feb 18s. Number 3, 59,000 of the Feb 16s. So a whole Feb call palooza here. Number 4, 45,000 of the Feb 15s, and number 5, 39,000 of the March 19s. Before I go on with the rest of the week, Mr. Rock Lobster, let's start there. What are your thoughts on those? 250,000 Feb 17s for 67 cents. Are you, in the terms of our audience, are you buying those? Are you saying sold to you like Don Schlesinger?
Well, you know what's funny? Is remember how Don would say some options are meant to be sold, and then some aren't. I believe he famously said that. And it was funny, and I wrote a note on Twitter to Chris Sidile, the Ambrus chief, one of the co-chief investment operators, who is an excellent. I keep getting mad at him on Twitter because he gives away too much good stuff for free. I'm like, I'm not even going to have an education business anymore because you keep giving all the good stuff away. So, but you know what? I'm kind of feeling this was 50 cent. And because we're in this new, we'll call it Bidenomics inflationary time, instead of paying 50, he's paying 68. What do you say? I say it's the new 50 cent. He's back.
68 cents or 67 cents doesn't have the same ring to it, though.
it does not, but I feel it's somewhat inflationary. I was looking at the numbers since the beginning of 2021. Inflation, the way they were calculating is basically on average up 17%. So 17% of 50 cents would be, what would that be, 8 cents or something like that. So I guess this is much more inflation than just the standard inflation that we have right now. But either way, it has the look and feel of the duck quacking.
That would be sad.
Didn't he used to buy like 500,000 contracts? Yeah, again, we don't know if it's a he.
He would put up some
or
size.
They bought 500,000 contracts, as I recall. It was a pretty good chunk.
I'm trying to remember what strike he was on last time. I'll have to go look and see. But
I think he was still cashing in the COVID money.
It would be sad if inflation also robbed us of our 50 cent. He's now the 67 cent. That would be yet another victim of the price gouging that is going on out there.
How do you meme 67 cent?
Yeah, it's not as fun.
50 cent, you had the wrapper and the stuff, and there was some cachet there. I think another thing too is, even as I look at it, 50 cents buys you the Feb 19 call in VIX. So when I look at this from a straddle point of view, like I gravitate toward the like the 14.5 put for $1.25, and the 19 call, that would be $1.75. So you have most of the value of the straddle is in that long-term VIX intrinsic value. And this is the hard part for everybody. Then you just do nothing. I have in the past, I have bought VXX against the Delta sometimes. So instead of the VIX future, because the VXX is just easier for me to trade, I can do it in a retirement account pretty easily. And that's the only time I would ever buy VXX is when I'm trying to scoop, kind of cover a VIX Delta by using the product. That I don't really want to sell the puts per se yet. I just want to, I would rather buy in the VXX and create the extra synthetic call in case we turn around, so that way you can kind of double dip on the upside if it happens. But, and that's, I think the pricing on that right now is pretty good. Like my threshold for the VIX strangle, I love them at $2.25 or lower when they're in the money, depending on how in the money they are and sort of where VIX is. And basically there's almost too much to buy at this point. So I've bought enough for now, and I'll probably take a look next week. But as a trade, it's amazing the relative, just nobody there's except for this buyer today. the option pricing is fairly low. Like the at the money volatility in February VIX is 70. It's been a while since I've seen it that low. I'm trying to look here. It has not been that low in, I think, mid-December. So mid-December was the dead low of VIX, as I refer this cycle. And that's the last time that the volatility, well, the 14.5s are a little bit more in the money at that point. But so I think for the strike being at the money, this is about as cheap as it's been, which is not that much. I mean, a 14.5 call is $1.15. So they're not charging you a lot. So like if you buy the 14.5 straddle right now, you're paying $2.48. Like it's just it seems very, very low to me when VIX is already 12.5. So most of the value of the strangle is intrinsic value, like 80-90% of it. It's crazy inexpensive. It's just managing the trade after you put it on is a little trickier than you would want to believe. But I mean, at this point, it's just a dead cheap strangle. And when things get cheap, I can't help but buy it. So the key is not getting annihilated when it gets to the lowest price. So that is part of the game when you're an option buyer. So you have to be a little careful sometimes. But it looks. I'm going to say this is the first taste for 50 Cent, who is now 67 cent. I know that's kind of a bold call. I don't know if it's enough volume yet, but it has all the look and whiff. I mean, you're buying VIX calls, and day one, your VIX calls are up money, and VIX isn't really doing anything, so you know what's happening there. There's the ball's going straight up.
I think the rapper is going to adjust his name to 67 cents as well for inflation. That would be interesting. That would be interesting indeed.
That would. Can you imagine? He's like, I'm no longer 50 cent. I'm 60 cent.
Yes, for inflation. That would be a good sign of the times.
That would be even rappers would be quite funny. Actually,
are adjusting higher for inflation. Let's keep rolling through the rest of these VIX numbers. Like we said, today a bonkers day. Yesterday a little bit quieter. 511,000. The big dog. 20,000 of the Feb 22s. I'm going to keep rolling because we're already kind of coming up against it. We still have a lot to get to here. Busy day for this volatility snow day. Wednesday, another bonkers day. 919,000 contracts. The biggest print, only 38,000 of the Feb 18. So again, just shows you a very active day. Stuff printing all over the place. Number 2, 34,000 of the Feb 19s. Number 3, 34,000 each of the March 19 calls and 19 puts. Looks like a March synthetic or maybe a straddle traded there for around $5. Yeah, $5.77. Again, that's the 19 strike. So if it was a straddle, it's a weird strike. But it looks like they also did it maybe against a Feb 16, 18 risk reversal. So all 35,000 by 30,000 times, all went up as a spread. So all sorts of funky stuff going on out there on Wednesday. Tuesday, also a beefy day. 691,000 contracts on the tape. The big dog on Tuesday, 34,000 of the Jan 13 puts. So there are puts trading this week. Just not enough to make it into the top 10. Number 2, 29,000 of the Jan 20s. Number 3, 27,000 of the Feb 15s. Number 4, 25,000 of the Feb 19s. And number 5, 25,000 as well of the Jan 13 half puts. Monday, the bonkers day of the week, at least so far. Obviously, today not done. Today could take the throne. It is pretty close already. But Monday, 1.12 million. So our first million handle in a little while. And we talked about it on the option block on Monday. Just what the hell was going on out there on Monday? It was bonkers. The big dog on Monday, 156,000 of the May 47 halves. As you'll recall, all these kind of top options all printed at the same time in one massive, it wasn't even marked as spread. It was just one massive simultaneous trade. 83,000 of the March 20s, 62,000 of the Feb 42 halves, 59,000 of the March 40s, and 36,500 of the the April 15 puts. Bunch of back and forth opening to closing. But if I jump down to about the number 8 spot here, we also saw 30,000 of the May 22s going up at that same time. So if you just isolate the May out of that, those were both opening. We did find out those are both opening. So it could have been the old 1x5 Mr. Rock Lobster. In fact, I think we joked about that show. We called it the return of the 1-5, mostly because of this trade. 30,000 of the May 22s against 156,000 of the May 47 halves. You've had the better part of a week to mull this over, Mr. Rock Lobster. Do you like that 1x5 any better now, sir? Buying 30,000, selling 156,000 of the May 22 47 half 1x5, sir?
I I was still trying to figure out what the margin was on that trade.
I think it was 67 cents. Bam, callback.
Yeah. It's like, again, one of those things that look great on paper until the vol goes up, until implied volatility rises, and I had to remember. You know what? I'm gonna do a report on the second order Greeks, so I can call that the right Greek. I think it's Volga. I'm not sure. But it's the volatility of the Vega of that option, or the curve on the Vega of the option, which is probably pretty enormous, especially when it's 150,000 times. So I don't think I like the trade more. It's one of those trades that look great on paper. It will probably make money. But I would have a hard time believing it doesn't have a little scaredy time at some point. There has to be some point where that trade just might get a little ugly to manage if we get any kind of a jump in vol. Because the hardest part was, you're getting short Vega at the dead bottom. You look at a chart of VVIX, and it's not too hard for VVIX to double. So when you have a trade that size, that's a lot of short Vegas, even if you don't, even if you never see, even if you never see the upper strike or get close to it, what's the vol charge going to be if those calls go to $3 or $4 or $5 or something like that? You got to have the dough in your account to cover the margin, because the one lot will not be enough. It'll make you money for sure, but it's not going to be enough on the net Vegas charge. So it is a fun yet scary trade that I will be happy to monitor from afar and not actually have on.
The technical term for that trade is bonkers, sir. That's just a bonkers town across the board. Let's keep rolling.
Just call it what it is.
Yes, it's freaking
call
bonkers.
It what it is.
Let's keep rolling out here to SVIX, also bonkers, hitting a new all-time high again yesterday of $40.30. Back off it now to about $39.30. Only a couple of thousand contracts on the tape. So for whatever reason, these new all-time highs are not translating into a lot of options flow, even though the ADV has ticked up a little bit to about 3,600. The size position right now in SVIX options, 2,160 of the Jan 40s, 4Os. Those would have seemed laughable about a month ago. Now those were in the money yesterday. So crazy town out there. Let's keep rolling out to UVIX. The ever-eroding UVIX out there was at a 12.25 when we kicked off the show, down about 1.5 points. Still pretty much there, listeners, so almost back to reverse split town. About 8,000 contracts on the tape today, so again, not a bonkers day. The ADV about 12,000. That is indeed up about 1,000 from last week. The size position in UVIX options right now, 3,000 of the 13.5 calls expiring on February 2nd, so in the weekly. So intriguing stuff there. And then everyone's preferred vector, UVXY, out there these days, 7.75 when we kicked off the show, down about 2/3 of a point. Still right around that level right now. There is about 102,000 contracts on the tape, which is good because the ADV is 103, so right at the ADV. And that indeed ADV is up about 12,000 from this time last week. The size position out there in UVXY, this is all still pre-split adjusted. So let's scroll down a little bit. The first pre-split adjusted are the Jan 8s expiring today, 21,000 of those. So those looking rough right now if they're buyers of those. Again, these products can be heartbreakers going into expiration. And let's round out the rundown on all things VIX ETPs as we're rolling on into the end of the show here with VXX was at about 14.75 when we kicked off the show, down about 0.75 of a point, and still right there right now. 60,000 contracts on the tape right now. The ADV is 79,000. That's up about 8,000. So all of these ETPs catching a little bit of a volume bid over the last week, even if they can't catch a price bid. And in terms of the size positions out there, number one is 33,000 of the Jan 14 puts expiring next week. Mr. Rock Lobster, I just kind of ran through the entirety of the VIX ETP universe. Anything catching your eye in any of those products this week?
I think the thing that caught my eye the most was all of the short vol products made all-time highs. SVIX made all-time high this week, I believe.
Yes,
I unloaded my 39 calls and my 38 calls this week. So I was fairly happy. They were Jan 19, so they're getting a little. They get close enough to expiration. I'm like, I'm done. And so I'll be looking to reload those positions. Again, I'll just wait till next week, let things cool a little bit, see if we get any reprice in VIX at all. But so the long vol products made all-time lows, and the short vol products, at least since Vol Armageddon, I believe, SVIX product high, and the new SVXY, I believe, also is at a product high. It's 106. And let me go back here 5 years. Yeah, so right before, and that product has actually performed pretty well. So even during COVID, SVIX went SVXY, because it's only half geared now, 69 down to 2283. You would have made 4x your money if you bought it at the very bottom. So it's trading 106 now, and that as a product at 5-year high. So you have what I would say is, normal performance for, said products. And of course, UVIX is already, weren't we laughing? Like, Mark, it was only not very long ago, right? Where like they split 10 for 1 or something.
Yeah, it wasn't that long ago at all. I said we're going to have to do this dance again in a little bit. The market was kind to them. We were
laughing, and then it got that little pop.
Yeah, the market was kind to them.
It went like straight to $45, I think. So it was $45 at the end of October, and it is now $12.27.
They just love paying for reverse splits. Is what they like to do.
So all I can say is this week was a week of highs and a week of lows for the volatility ETP universe, and I happily closed a couple of positions and moved along on my merry way.
There you go. We have to keep on moving along as well. We talked about the earnings vol at the top of the show. No show on Monday for the option block, unfortunately, so we don't have time to sink our teeth into all the financials popping off today, but obviously maybe some of the bloom coming off, some of that financial rose that was there post-Fed. Intriguing stuff out there. You can check out all of that data if you want. TheOptionsInsider.com. Click on the Options News and Articles tab as we keep on rolling into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, I'm just going to bang through some of these polls right now because we got a lot to get to, and also our picks for the end of the show. Our fun little flash poll is 50 cent back, yes or no? That's not the poll, but it's a fun one. We said, do you want to buy or sell these Feb 17s for 67 cents? It's been literally locked at 50-50 for the entirety of the show, and now it just ticked 60-40 sold to you. So our audience looking to sell these. This will be live. We'll keep it live through the podcast through the rest of the day, listeners. So you folks listening on demand won't be left out. In terms of the news of the week, now that spot Bitcoin ETF is approved, will Bitcoin close positive on the year? Heck yes, heck no, or I don't trade crypto. 50 cents. This one has changed just in the last few hours, which understandable. Bitcoin taking a turn to the dark side. 57.1% of you still saying heck yes. 25.4%, so a full quarter of you saying I'm out on crypto, and 17.5% saying heck no. And our actual sentiment poll for the year, will the S&P 500 close positive on the year? Are you folks surprisingly optimistic? I'm used to all you folks just fading every single rally for the last few years. This week, 73.3% saying heck yes, 21.7% saying heck no, and 5% saying, who cares, I'm in crypto. We had our buddy Mr. Dr. VIX on Twifo yesterday. He thought those numbers were interesting. That made him very contrarian. And I have to say, I'm not disinclined to agree. I've never seen our audience this optimistic, so I'm not sure what to do with that number. It's not done yet, but it is kind of throwing me for a little bit of a loop. Speaking of throwing me for a loop, let's see if our vol predictions and the market itself threw us for a loop. Coming into the end of the show, we have VIX right around a 12.5 out there in the VIX cash. Yeah, 12.5. I was at 1367 right now. Mr. Dr. VIX was on the show this last week. He was at 13.25, so no joy for either of us. The Rock Lobster was the closest in air quotes because he had a 12 handle. He was at 1290, still 0.4 away, so no joy for either of us. But Mr. Rock Lobster, you were closer, so I will allow you to choose. You want to go first or you want to go last? Or do you want to hit your mute button?
Oh my gosh, talking to myself again. I actually, I think we saw there was like a 1285 this morning. So
you were there for a second.
I had a shot.
We all know VIX is a fickle mistress. We've all learned this painfully.
It is a fickle mistress. I'll tell you what, I don't think we're going to see a whole lot. We got the holiday and this whole, I still think we're going to make vol lows just because I haven't seen any evidence to the contrary. So I'm going to go 1-2-1-2. 12-12.
12-12. So you're almost doing your buddy's palindromic nonsense, but doing it a little bit in reverse fashion out there. So 12-12 for the Rock Lobster. That leaves me, listeners. Yeah, we're coming off a snow day weekend, obviously a long holiday weekend next week, so a truncated week. What vol will be left at the end of the week is the question. I'm going to say probably not a heck of a lot of evolution from here. I'm going to say 12.55. I'm not feeling a heck of a lot, listeners. Get your guesses there in the live if you're listening live. Get them in after the fact if you're listening after the fact. Everyone can be entered to win fabulous prizes. And Mr. Rock Lobster, if they want to have fabulous fun talking some vol products with you, where should they go? What should they do?
You can go to optionpit.com. All my products are over at Option Pit. I have things are going very, very, very well. We've opened weekly profit cycles up for people that just want to try it for a quarter. Try it for a quarter. See if you want to learn how to create an uncorrelated return to the market. Again, the product has had a fantastic year since we've launched it. I can't be more pleased with it. So Mark's even trying to shop the idea of an ETF around on the concept. So that's all I need to do is one more thing to manage.
There you go. But manage your ETF. But then I can make fun of you for not reverse splitting in the proper fashion, sir.
Exactly. So anyway, so yeah, come on over to optionbit.com. So yeah, if you want to learn how volatility works, how it could help you become a better trader, and learn how to trade vol time and the underlying, come over to optionpit.com and we will be happy to help you out.
There you go. Optionpit.com is the place to go. We got to get on out of here. If you're listening on the podcast side, that will conclude your broadcast week with us. Hope you had a fun second week. Certainly was a wild one. Hope you're enjoying your volatility snow day wherever you are. If it's not a snow day where you are, hope you're at least enjoying your long holiday weekend. Remember, no option block on Monday. If you do want to come back, you don't want your week to end with us, then head on over to the Pro. TheOptionsInsider.com/pro is the place to go. I'll be back with the Rock Lobster talking all sorts of fun trades in a little bit. He's got some fun stuff up his sleeve that I know he's pretty excited about. And I have some fun shenanigans there to unfold as well. So all sorts of fun going on Options Oddities. Find it over there, theoptionsinsider.com/pro. Then again, we're off on Monday, then back again with our usual assortment of content throughout the week until we're back again next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.